Well, as many have been predicting, the Labor government is coming after our super. My name's Trevor Russell. I'm the director of the Results Investment Group and also the creator of the Retire Rich YouTube channel, where I'm committed to sharing information around what we can do to retire wealthy, to know how to use our money in smart, financially literate ways, and to give you the information as to what you can do to live not only a happy, healthier retirement, but what you can do here and now to understand money, investing, borrowing money, property investing, so we can all live a happier, wealthier life, because I believe everything comes down to good education. This video is for education purposes only. This is general advice. Please speak to a financial advisor in relation to any investment strategy, this or other, before making any investment decision. And if we can help you, we have financial advisors and professionals who can help you with any of your self-managed super fund retirement investment strategies. But enough of all of that. What I'd like to talk to you today about is the proposed law that Albanese, who Australians who elected him to be our Prime Minister to run this country, is trying to put through Senate, which is the pre-capital gains tax on a super fund. And what I've done is I've created this report, which you can grab a copy of if you'd like, and email me from my email below. And what is in this easy to understand report is what this is all about in relation to Labor's tax on unrealized super capital gains tax. Now, when we talk about unrealized capital gains, that means that we have got an asset that's gone up in value, and even before we've sold it, he wants to take some money off us out of that capital gains. So that means over a certain amount, and following the rules of this tax law, if it goes through, we have to find money to give the government, even if we don't have it. That means we have to sell assets. That means a whole lot of issues. Cause for people that have done the right thing to take charge of their own money, to take charge of their own financial freedom, to avoid being a burden on the government system by not having to have a pension. And what are they doing? They've got to pay and give money over to the government for all their years of hard work. But let's go through a few key points in the guide just to highlight why this is a potential threat if passed, but then also what can we do as opportunities here in relation to this short-sighted, I think, ridiculous tax. And I really do hope that it never goes through. And I do think a lot of people don't know about this proposed tax. And I think it's important for you and all of us to understand the potential implications that if it is passed. Hopefully it won't. Hopefully our Senate will do the right thing. But let's look at what is called the proposed tax, known as Division 296. How it'll impact us and the threats and what it can do to help take our hard-earned money away, especially in retirement, the short-sightedness, and then the opportunities as to what we can do, which I've highlighted in this report. But let's look at a couple of key things really quickly. This is a tax that is going to affect people that have over $3 million, they're saying in here, as a threshold. However, don't think that you could not be affected by this, because under this law, because of a lack of indexation, which is explained in here, this tax has the potential to affect just about everyone that has super. You've even got a couple of $100,000, and let's say that goes up, by X amount in a year, you could potentially in the future be risked of having to pay a 15% tax and find that money out of that capital gains without even having realized it. In other words, it's gone up in value and you've got to go find money and give to the government. That's right, money you haven't even made yet, only on paper. Now, a couple of things about this. Even though in Norway they tried to do this and didn't learn from it, because the issue with a tax like this is people will take their money, and smart people who are generally wealthier people and have more money, they'll always find a way. They'll always find a way to sell assets, move it. And what I believe is so short-sighted about this tax, if it passes, is it has the risk of people taking money out of super and going diversifying into other assets, and even taking their money out of Australia and investing offshore, moving out of Australia, which has the ultimate impact of affecting our economy. It puts greater pressure on the pension system. And you know, how's the comment? Firstly, it's part of responsible fiscal policy, which, if you don't know what that means, is fiscal policy is we need to find more money somewhere. So what we'll do is we'll go get it out of people's super funds, and that's where we'll find the money, right? Then the other issue is that people who say don't have a super fund, self-managed super fund, have no control over what happens here. This will just happen, and that's why we'll talk about if self-managed super funds as a structure is of benefit to you, so you have greater control over your retirement money and what you can do with it to diversify and mitigate and avoid this ridiculous pre-capital gains tax in super if it's passed. Let's look at a couple of other points here. I've just highlighted that this is a 15% tax on unrealized gains at this point on the amount of over $3 million. Now, that may seem like an extreme amount to you, or maybe not, but there are thousands and thousands of people that over the coming years are going to have over $3 million in their super fund, especially people now that we're working with, and more people are looking into self-managed super fund property investing. $3 million is going to be a target that a lot more people are going to have in their super fund. And it's almost comical to read these comments when they've said in the material I was researching, the government expects that this will only affect about 80,000 people. Well, it shouldn't affect anyone, really, because it shouldn't exist. Politicians, whether they do a good job or bad job, will retire on an income for life, regardless of what they implement. They will have an income, a retirement income for life, for whatever they do, good, bad, or the other. So why shouldn't we? Why shouldn't we have the right to retire on our money? And they work for us. They're our employees. We elect them. And I do think the problem here with this proposed tax is a lot of people don't know about it, and the potential threat to people's hard-earned money that they've accumulated and built and created for their own retirement, only have to hand over to, you know, this current government. So let me just show you some numbers at the moment. Just roll with me on this. If you've got a $3 million property, let's say in a super fund, self-managed super fund, and it goes up by $300,000 in a year, goes up in value. It's not sold, it just goes up in value. The 15% tax on that 300,000 capital on the growth, and you're also going to be taxed an additional 15% on any income. So it's currently 15% up until retirement age, and then the laws can change after retirement age, but then that's a whole other discussion about that. We won't go into that today. Under that one example, you have to find $45,000 cash that you've got to pay the government. You haven't sold the asset, it's just there, but you've got to now go find $45,000 in unrealized capital gains. Now, this is just mind-boggling, because what is this going to do? As I've said, it's going to force investors to sell assets, to restructure, to pull money out of their super. They'll go use trusts and entities and they'll move it offshore. This is all going to have a profound long-term impact on the Australian economy because of this short-sightedness. Oh, where can we get some money from? Where can we get some money from? Now, I'm not a politician, I'm not an expert on this topic, but what I do know is this: to take from the people who've worked harder to do the right thing, to build wealth, to put into a system that has, let's face it, little to no idea what to do with money other than spend it. Now, I'm not saying we don't have a country to run and this isn't a great country, but the way this country is going and our dollar value and what is occurring, all I'm saying is we, the people, need to be aware of what's going on and start taking notice of what some of our government leaders are doing, not all of them. And I'm not saying that the Labor government is all bad. I know that they're trying to do good, but you can't just keep taking money from people, especially people who are doing more to build more, to give into a system where it's just going to go, because as I said, people will leave and they'll go and find another way, and I don't believe that that's ever a positive strategy moving forward. Thank you for watching. Clearly, I'm very passionate about this topic because I want people to be rewarded for their efforts, not taken away, not taxed and implemented. I personally believe the more someone makes, the more benefit they have, because it proves that they're doing a good job. Okay, but that's just me. Clearly, I didn't vote this government in, but I know that they're doing a lot of good too. But anyway, as I said, I'm not a politician, but please just know about this tax, this division, what is it, division 296, pre-capital gains tax on your super. I personally think it's a very, very short-sighted, bad potential decision that could affect many, many more people, because even I think that figure of 80,000, it's only about today. What about in the next 10, 20, 30, 40 years? The hundreds and hundreds of thousands of people that this tax could affect, and not just the investor, but the people that run businesses to help these investors invest in property or different services. You know, this is the impact, but there is also opportunity by being aware of it and looking now at what we can do to be able to avoid these short-sighted decisions that some governments go and do in the attempt to make and find more money. So if you would like to ever have a discussion around what you could do to take your super and get it working more effectively for you now, and you have, say, over $100,000 in your super on your own or with your partner combined, you and your partner receive an employee contribution, and even if you're working for yourself and you're paying yourself the allotted employer contribution, and you're planning to work for 15 or more years, a self-managed super fund investment strategy could be a very possible way for you to accumulate more money and wealth, so you have ultimately more options. Because this is also creating a quality problem, which is when you have more money, you have more options to diversify your money. And I've put in this report a whole number of ways to diversify and be more conscious now of what you can do by setting up and managing your own super, where you've got more control, you've got a greater opportunity for more growth. So down the track you can diversify, and our accountant's very good at explaining how a self-managed super fund structure works and your options. And we have a 5-step process that we take people through to help make it a really easy and understandable process. So thank you for watching. I know I've jumped around a bit. I'm clearly a bit worked up about it, a bit upset. I believe our government is employed to do the good things by us, and maybe I'm a little bit in Pollyanna land, but for me personally, who works in a space where we are trying to help people have greater financial literacy, be able to create more wealth and income and money for their families, and to have a better quality of life, and to see this potential tax come through that could impact people's years of hard work and working to do things smarter and more productive ways, and to also make it be a cost, not even come out of a sold asset, but out of money that hasn't even been realized yet. I mean, if you don't get that, please try and get it, because that to me is just mind-boggling that a government would try and do it. But please, Senate, if anyone's watching this video, please don't pass it. This is a really bad thing, but we've got to be responsible. Let's fight for our money, our wealth, and let's do all that we can to be in control of our own wealth. Thank you. My name's Trevor Russell. If you like this video, please subscribe, please like it. I'll share more videos on this topic, of financial financial literacy, retiring wealthy, and what we can do to live happier, healthier, wealthier lives and have more control of what we're doing and where we're going. And there are options, and the world that we're now in is growing in opportunity, and there's so many different ways now that we can make money and do things, not just on a local scale, but on a global scale. And that's the exciting times that we are living in, way over and above these limited short-sightedness of outdated, decisions to try and take a bit of money. I mean, why doesn't government figure out how to make more money, right? Use technology, get smarter, not just take it from the people all the time. Very outdated, I believe. Let's be abundant. Let's make more. Thank you for watching. We can do this. We've done the most amazing things. We can do the most amazing things, and together we can live richer, happier, healthier lives. Trevor Russell, Retire Rich. Reach out if you want a copy of this special report, and if we can help you in this space of self-managed super funds, setting that up, helping you get your money to work smarter, borrowing money to buy and invest in property. It'd be a pleasure to help you. But sending love, sending strength. Let's keep moving forward. Ciao for now.